Taxability and customs. Levy of CGST ruled on section 12 of customs act 1962. That must be goods. That's good. Must be customs tariff act 1965. Dutiable goods. What is the dutiable goods means? Import and export. Such import. Such import must be such import must be into India and export from India. The government shall be treated as part of the non-commercial goods from the levy of customs duty. Import and duty. Import definitions. Section 222 goods. Goods includes vessels, vehicles, vessels, aircraft, stores, baggages, currency, negotiable instruments, any other kind of immovable goods. Section 2 class 28 stores. Stores means goods used in the vessels, aircraft, including fuel, spares, parts, and articles of equipment where it not be any immediate fitting. Import goods. Section 202. Imports into the grammatical variation, congruent expression means bringing into India one place outside India. Export goods. Export is a grammatical variation of congruent expression means taking out of India and place of outside India. Section 2 plus 27. India includes territorial water of India. Territorial water is equal to up to 12 nautical miles from the baseline that is provided. CA Act 1962 applicable. Exclusive economic zone is equal to 1 nautical miles from baseline. A few sections empowered by the customs officer or the arrest or any other such vehicles which applicable. High sea is equal to beyond 200 nautical miles. Section 2 plus 21. Customs area means area under the customs section including any of the areas in import duty and export duties or ordinarily kept under clearance or customs authority. Section 2 class 14. Dutiable goods means any goods which is chargeable to duty and on which duty can be paid. Section 2 class 28B. Indian customs water. The means water extended into India up to the limit of exclusive board 200 nautical miles. Section 2 class 9. Customs goods. Export goods means any goods which has been taken out of India. Exporter. Section 2 class 20. Owner beneficial owner a person holding himself out of exporter. Section 2A. Section 2.3A. Beneficial owner. Person who better behalf of the goods has been exported, importer, exporter, or excising by expenditure. Effective control over the goods being imported and exported. Section 2 class 25. Imported goods. Any goods bought into India from the place outside India. Section 2 class 27. Importer. Owner or beneficial owner. Any person holding himself out of the importer. Section 2 class 3. Baggage includes including unaccompanied baggage but does not include motor vehicle. Includes 71. Costs and goods. Goods other than the imported goods transported in vessel from one part of India to another part of India. Section 2 class 21. Foreign going vessels or aircraft. Any vessels or aircraft of the time being engaged in carriage of goods as between any port of India and any other port outside India, whether touching the intermediate part of an airport of India or not included. Any naval vessels or foreign goods taken into a naval vessel exercise. These vessels engage in the fishing or any other operation outside the India water of India on the vessels aircraft proceed to the India place outside India for any purpose of the option available imported for the import of goods. Option for clearance of home consumption upon payment of customs duty by the filing bill of export of the home consumption. We'll have to deposit a warehouse without the payment of customs duty by filing a bond of bill of entry and clearance on the warehouse upon the payment of customs duty by filing the bond bill of entry without filing a bill of entry. Unloading goods can not be cleared by the home consumption from the warehouse. The goods can be cleared to the warehouse without payment of duty, but thereafter then clearance of home consumption on the warehouse customs duty payable. Bill of entry can be filed before the arrival of the before arrival after arrival. The time limit is being the date of arrival. If the filed on the date of arrival later, then the late fee is payable. Clearance from the warehouse on the taxable event if and goods are exempted at the time of import and then the goods are clear from the warehouse, it's exempted in the withdrawal duty is payable. In the same way the goods is durable at the time of import and before the clearance of warehouse the goods are exempted, then the goods are not payable. Customs warehouse does not mean a warehouse belongs to customs department but a warehouse which is owned by the person licensed by the customs department as act of customs warehouse. If the importer has a warehouse for which license is obtained and then it can be deferred from the customs duty payable. Till the time the use of the goods and the clearance for the warehouse only the taxable events. Various documents involve mode of import and export by vessel, by aircraft, by ship. In the case of import, to be filed by the PIC. In the case of import, filed by the importer. That is import manifest bill of entry, arrival manifest bill of entry, and import report on vehicles bill of entry. In the case of export, to be filed by the PIC, to be filed by the exporter by the vessel's export manifest shipping bill. For aircraft departure manifest shipping bill. By vehicles export report bill of export. Person charge master vehicles pilot aircraft conductor or guard or by any other person. Only after the filing the import manifest, goods are returned towards given to the vessel. So the enter into India. The concept of grant of entry inward is not applicable in the case of aircraft on the vessel, but the aircraft manifest and import report shall be filed before arrival. Along with the bill of entry, importer has to submit airway bill in the case of aircraft, bill of landing in case of vessel, lorry receipt in case of railway receipt in case of vehicle. To claim the ownership of the goods as the invoice or invoice raised by him, supplier outside India should be filed. Taxable event and relevant date and determine the date of duty. Taxable event section 12, import to export to option 1, cleared from home consumption, cleared option 2, cleared for home consumption 2, export date of crossing of territorial water, Rajantra dyeing and printing mills is an export case. Date of crossing customs barrier, Kiran spinning mills and garden silk mills cases, Supreme Court. Relevant date of determination rate of duty, section 15, follow section 16. By vessel, a date of presentation of board of bill or a grant of entry inward, whichever is later. By the aircraft day and vehicles for the date of presentation of board of invoice and board of entry, a date of arrival, whichever is later. So that is rate. Date of presentation of export of bill of entry for clearance from the warehouse for the home consumption. Date of which the late export order is passed by the proper officer. Relevant date for determining the exchange rate of provision. Date of presentation of bill of entry. Date of presentation of duty வந்து later, but rate earlier. Date of presentation of bill of entry, bill of exchange, and the date of presentation of shipping bill of vessels or change in vessels in the vessels, and the bill of export in the case of vessels vehicles. Exchange rate determined by the CBIC should be considered in the case of imports and import export relevant as date of payment of duty. Segment 22, classification of goods under customs, general interpretive rules, GIR and rules for interpretation of tariff. Rule 1, and the titles for section, chapter, subchapter and provided for the reference only. Classification based on headings read with the relevant section and have chapter notes. Rule 2, any reference to complete the goods or included an incomplete unfinished good, that is complete good is equal to incomplete goods or unfinished goods. Rule 2b, any reference to the material include combination of the material with the material, that is material is equal to combination of material with others. Rule 3a, specify description shall be described in the heading providing general description, prefer specific over general. Rule 3b, specific shall be as per the essential character if the particular goods is mixture and composite of goods containing different material. Rule 3c, if both the headings are specified then later the better. Rule 4, akin goods, a last rule classification when the goods under the questions can be classified under the heading which is most related to the goods. Rule 5, packing containers and packing material can be classified along with the main article which is sold. Rule 6, goods are computed for classification as the same level only or at the heading or subheading, but any heading the chapter cannot be compared. Types of customs duty. Normal customs duty specified under section of customs tariff act. Various customs duty payable. Basic customs duty BCD as per the tariff act. CAT standard rate and preferential rate under section. Applicable rate given in the question and accessible under the section 14 of customs. Social welfare surcharge on EC and SKGC omitted. 10% of BCD basic customs duty. Integrated tax GST labor and imported. GST rate in force assessment value plus all customs duty above. GST compensation leave on GST compensation use for an accessible value plus all custom duty above. Note 1, in the past import custom duty under section 31 is levied in order to counterbalance excise duty and additional special additional duty under section 3 class 5 was levied in order and counterpart of sales tax. However, now on GST is applicable to the limited for Q goods. Note 2, in the case of export only BCD is applicable if the export charges to duty. Note 3, in the case of warehouse goods only sold by way of transfer of the warehouse receipt. IGST under the custom shall be computed by assessment value plus basic custom duty plus SWs and sale value of each such warehouse receipt which is higher. When the BCD is nil, then the SW is also nil. See me circle. Now, additional customs duty of import, particular protective duty, safeguard duty, anti-substitute duty, anti-dumping duty. So section safeguard product duty. Okay, safeguard duty for fair export, anti-subsidy duty for unfair export by exporting country, anti-dumping duty unfair export by exporter. Section reference section 6 CTA of Customs Effect 1975, section 8A of CTA, section 9 of CTA, section 9A of CTA. Authority will leave it by central government recommendation, leave by central government receipt of complaint or information. Relief against it does protect the interest of the industry established in India against import protective duty, and relief extent of relief increase the basic customs duty, investigation not required, provisional duty not required, duration not applicable, excise duty account not applicable, duration duty not applicable, exemption of levy not applicable, retrospective not applicable. Safeguard duty SD, relief against serious injuries to the domestic industry on the account of import of large quantities. Extent relief to the extent of adequate to prevent a remedy. A rate shall be specified in the questions. Investigation required. Provisional duty yes until the completion of investigation. Duration 200 days. Excess duty accumulated. Refund allowed and differential duty payable. And for a period of 4 years plus 6 years, maximum 10 years. And import levy of the duty import 100% EOU and unit SEZ. However, if the import is clear of DTA, it is applicable. Retrospective not applicable. Anti-subsidy duty. Relief against serious injury to domestic industry can account of subsidy enjoyed with the exporting price. Extent relief to the extent fully extent of subsidy allowed in the export price. A rate shall be specified in the question. Investigation required. Provision duty yes until the completion of investigation. Duration 4 months. Excess duty account finalized. Duty allowed and differential duty payable. Duration 5 years plus 5 years and time after the review of maximum unlimited time. Exemption from input on the 100% EOU and unit of SEZ. However, the input on the clearance DTA is applicable. Retrospective upon 90 days from the date of notification. Anti-dumping duty. Relief against serious injuries to domestic industry and account of import of goods at the cheaper price. Extent of relief lower is called dumping the margin is called the sale value of export country minus export price of India. Injury margin is equal to sale value price in India minus landed value as assessment value plus BCD plus SWS of the imported goods. Investigation required. Provision duty yes until the completion. Duration of provision levy 6 months. Excess duty account finalization. Refund allowed and differential duty payable. Duration 5 years plus 5 years time after the review. Maximum unlimited time. And exemption of levy import of 100% EO unit of SEZ, and however if the import is under clearance of DTA it's applicable. Retrospective after 90 days before the date of notification. Automatic extend to 1 year if this is not declared, and extend not and instead of expire 5 years. Or in the case of import of large quantities, government can require tariff quota, that is fixing the maximum amount of import, a safeguard measure instead of safeguarding duty. All the provision of the section 8B remains same. Anti-subsidy duty section 9 and anti-dumping duty section 9A mutual exclusive. Special point of non-applicability of safeguard duty. The article originally from developing countries so long as the percentage of import of articles into India is less than 3% of total import of the article. Article originally from more than the developing countries so long as aggregate import of the developing countries less than 3% share of imports taken together less than 9% of the total import of the articles. Circumference of ASD and ADD where central government is required to inquiry and consider necessary as if the option of the circumference anti-subsidy duty and anti-dumping duty has been placed in the entire of the following ways: by altering the description and the name of the composition of the articles in such a way the duty can be imposed by article on unassembled or disassembled form, by charging the country of origin or changing the country of origin or export, if any other manner banned by ASD and ADD imposed rendering effective. It may be extended to ASD and ADD such a article form such a date not earlier that the date intention of inquiry as a central government may by notification officially get specified. Absorption of ASD and ADD. Whereas central government such an inquiry may consider necessary as if the opinion observed ASD and ADD taken place and whereby the anti-dumping duty so imposed render ineffective may be modified such duty. Counter of the effective absorption such a date not earlier than the date of indication of inquiry, central government may notification official gazetting. Absorption of anti-dumping duty is said to be taken place as if the decrease in the export price of the article without any commensurate change in the cost of production of articles. Old customs duty relevant to current scenario. Type of duty domestic import and alcohol for human consumption. ED CDV at 31. So CST VAT கிடையாது. Petroleum products, crude oil, high speed diesel, petrol, natural gas, so excise duty and CST. Section 3135, tobacco and tobacco products in excise duty under section 31, GST, IGST, and under 3.7, and section 95 under section 5. Okay, and other goods, GST under section 3 was one, customs at 95, and under section 5 of IGST. Computation of customs duty for import. Ascertainable value determined. Calculate EBCD plus 10%, 10% AV. Social welfare surcharges reduce 10% step 2. Then a customs duty excluding additional step 1 plus step 2 plus step 3. Additional duties, STV is equal plus STV plus CVD plus additional duty. So the total customs payable on GST was 4 plus 5. And total calculate of GST and GST compensation test plus 6. Total customs duty is 6 plus 7. ஸோ கஸ்டம்ஸ் டியூட்டியில் அசஸ் வேல்யூவில் பிசிடியில் எஸ்டபிள்யூடி, அதுக்கப்புறம் எல்லாம் சேர்த்தோம்னா டோட்டல் கஸ்டம்ஸ் டியூட்டி. அதுக்கப்புறம் அடிஷ்னல் டியூட்டினா அதுக்கு மேலே அதுக்கு மேலே ஜிஎஸ்டி, அதுக்கு மேலே செஸ், எல்லாத்தையும் சேர்த்தா ஜிஎஸ்டி. Rate of duty in the case of goods imported as per the article in section 19 of Customs Act. Import set articles are liable to ad valorem duty, liable to duty same rate, chargeable to duty at the rate, liable to duty different rate, chargeable value can be ascertained, chargeable to customs duty according to the basis of separate value, compulsory supply along with the main article and separate price not available, entire consideration chargeable to the duty at the rate applicable to main article, capable of supply separately but separate price not available, entire consideration chargeable to the duty at the highest rate, highest of the rate. The articles not liable to duty shall be chargeable to duty at the rate at which article is liable to duty reference to the value of the article. Valuation of customs. Valuation in the case of import section 14 read with section 10.2 of customs valuation. AVV is the value of the import value. Fair market value, FOB of price given, adjustment given below, plus insurance, ascertainable actuals, not ascertainable 1.125% of the FOB value. Freight ascertainable, then GAR freight actual or 20% of FOB. Other actual, not ascertainable 20% of FOB. So 1.125, 20% FOB, whichever is lower. Shall include the handling charges not other place of import but demurrage charges, light rage and bar charges are charges incurred by the transportation of goods by the ship to shore. Adjustment of FOB price rule and customs valuation rule 2007. Customs of buying commission to the importer agent paid by the importer to be excluded from the value. Selling commissioner to the exporter paid by the exporter to be excluded from the value. Paid by the importer to be included to the value. Other than the names of selling commissions, local agent commission. So the material sent by the importer to the exporter including capital goods or intangibles to be included in the value to actual cost or appropriate cost used in the manufacture of imported goods. Other expenses recovered by the exporter before import, after import, before import to be included in the value, after import as a condition sale as per the contract to be included in value, as per the import respect to be excluded from value. And customs valuation rule 2007 in the case of import following sequence of paid. Rule 3, accessible value is called transaction value. Above adjustment shall be made for rule 10 and the company shall have any doubt on truth and accuracy of declared value. And 4 conditions should be satisfied: unrestricted sale, unconditional sale, unrated person, price must be sold consideration. Rule 4, accessible value, transaction value of identical goods, imported goods, some physical characters, quality and reputation. Production in some countries in which goods has been valued or produced, product in the same person, preferred or compulsory. Adjustment shall be made with respect to difference in quantity, difference in transportation cost, difference in commercial level of importation note. If a multiple comparable transaction are found, the lowest of the such value may considered. Rule AV, transaction value of similar goods, imported goods, commercially interchangeable with the goods being valued, produced in the same country in which goods shall be valued or produced in the same person, preference or compulsory, adjustable with the value with respect to difference in quantity, difference in transaction cost, difference in commercial level of import, and difference in material engineering work. Note, if a multiple comparable transaction are found, the lowest of such values considered. Rule 6, when above the rules are not applicable, values be ascertained as per the rule 7 and 8 in order. Rule 7, accessible value, direct value. value. Selling price of the imported goods are identical to similar goods are unrated to the unrated price less post importing expenses, that is a customs duty. Rule 8 AV computed value, cost of production plus profit of general expenses plus freight and insurance of this above. Rule 9 assessable value of best judgment value. No value shall be determined on the basis of the sale price in India for the goods produced in India, sale price of goods in the domestic market of the country of production, sale price of the goods for the export to the country other than India. Cost of production is identical to the similar goods unless computed by Rule 8. Highest of two alternative values. Minimum customs value, arbitrage of fictitious value. Valuation in the case of export, assessable value, price prevailing at the time and place of export, FOB value adjusted not required. Customs value rule 2007, in case of export and following sequence 2 applied. Rule 3 accessible value is equal to transaction value. The PO should be satisfied that declare the TV and genuine even in the related party TV is acceptable. Rule 4 GV transaction value of goods and account of quantity. Export goods, the same physical characters, quality, reputation, and product of same country in which being produced, and the product of the same country compulsory. Adjustment should be made in different quantities and different in transportation cost, different in commercial level exportation. If a multiple compare transactions is found, the lower of the same value compared. AV computed, the cost of production plus profit of general expenses. AV best judged value. It has been specified that the local and Indian sale price of the same goods may be taken as a best judgment value. It is been reasonable. Valuation in case of import of second hand goods. Declared value based on the Form A. Yes, okay. Whether the report of the overseas chartered engineer subjected by the import Form A, then okay, no. The importer should the goods inspected by one of the chartered engineer impounded locally respective customs house and submit the Form B. Compare between the value declared by the importer, value of the report of chartered engineer, and depreciation of the rolled goods. Whether the doubt regarding the declare of value based on the comparison. Yes, a proper official seek the explanation of the importer and justify the declaration. No, AV is equal to TV under section 14 and declared value. Import provides explanation. Whether the proper officer satisfied with the explanation. Yes, and the value of the determined by the Rule 4 and Rule 9 of CVA 2020. Custom assessed with the value declaration identifying input goods or Rule 2017 CERV 2018. If the board has a reason to believe that the value of the goods may not be declared truthfully and accurately, having regard to the trend and declared values are the criteria. And both the board specify the class of imported goods which is process followed by the importer. Board may specify relevant class of goods and identical goods. How the board declares the goods as identified goods are written in reinforcement made on the board of officer. It is found suitable for screening committee of the detailed examination. It must be compatible and expressly explained by the evaluation committee. The evaluation committee concludes the value of the relevant class of goods may be declared truthfully. Screening committee makes a recommendation to the board based on the report submitted by the evaluation committee. If a recommendation accepted by the board, then it can be declared the relevant goods or identified goods. Exemption. The rule shall not apply. The import does not involve duty. The goods in which tariff value has been fixed by the board. The goods not an exemption. The goods are attract import duty and specific rates, and the import may made in the terms of authorization license issued by the date of exception and schemes and foreign trade developed by the 1992 in the case of import priority export of physical content with the export product. Import of the buyer and seller related to the investigation and relation has been contempt and finalized. And project import of by government public sector undertaking, import by the non-commercial quantities, import goods imported for purpose of export goods specified by the board. We saw the case exemption. Might have the price, consider the price. Customs procedure. India. So first outside India, hand over the cargo for export bill of lading. So exporter, then to importer. Importer 3, 4 arrival report or import manifest will give. Then master vessel 5. They will give this 5 and then they will deliver to cargo. After deliver cargo, bill of entry will be given. After bill of entry 8. Bill of entry upon verification return of the bills of payments and upon receipt of payments out of the custom charge. Then bill of lading முடிஞ்சோன்னா delivery order. Then after delivery order out of a customs charge order. Then after port trust authority release the imported goods. Wow. Note that all these import and export procedures under the customs or through the customs common portal ISKIT. In case of the import of aircraft 2349 replaced by the airway bill. In the case of import of vessel 23 and 9 replaced by the lorry receipt and railway receipt. In the case of airway aircraft and vehicles granted the entry inwards and not required for arrival but required for unloading goods. Complaints of the person in charge. Who is a person in charge? A master vehicles, master of a vessel in case of vessel, pilot in case of aircraft, and driver in case of vehicles. Plane of arrival, customs port in case of vessel, and customs airport in case of aircraft, and land customs operation in case of vehicles. Option not named. File IM, and follows. So section 30 related forms a penalty of 50,000 should be filed. Import by input document to be filed, time limit of filing, mode of oscillation. Vessel import manifestum anytime prior to the arrival, electronic. Aircraft arrival manifestum anytime prior to the aircraft, electronic. Vessel import report within 12 hours from the arrival, manual. Principal commissioner and commissioner may allow manual filing. The file passenger name and record information about the import manifesting, arrival manifesting, import report of section 13. In the case of import by vessel, goods can be uploaded only after obtaining a grant of entry. Section 31. Goods go into the custody of custodian as per section 41. Custodian shall ensure the safety of custody. In the case of welfarage, custodian shall be liable for duty. Only the goods are supplied by the import manifest, arrival manifest, and import duty shall be unloaded. Section 32. Goods should be unloaded only at the approval rate. Section 33. Goods shall be unloaded under the supervision of the proper officer. Section 34. After for the unloading, some small boats are required, and then shall obtain the boat note from the customs officer. Section 35. If unloading is holding or after the office hours, shall pay the merchant overtime charges. Section 36. Complaints of import. The importer goods unloading shall remain in the customs of custodian, who shall responsible for importer goods still clearance. If such goods are pilfered, such custodian shall pay customs duty. Section 45. Bill of entry shall be electronic through ISKIT. Follow section 46. Type of bill of entry. Bill of entry for home consumption. When the importer goods are to be cleared on payment of duty. Bill of entry for warehouse under the import bond. When the goods are stored without the payment of duty and underboard. X bond is VOE of the home consumption. When the goods are cleared for the warehouse upon the payment of duty. Time limit of filing bill of entry are either for the home consumption or warehouse. Minimum before the date of arrival, maximum 30 days prior to the date of arrival. If it does not arrive within 30 days of the bill of entry, fresh BOE shall be filed. Late fees or delay of bill of entry. Example, goods and duty. Delay within 3 days, 5,000 per day delay. Delay beyond 3 days, 10,000 per day delay. Late of bill of entry. Subject to maximum 10,50,000. Subject to 100% of dutiable. The pay GST duty after the filing the bill of entry of home consumption. Seeing assessment duty, and the customs officer may pass out the out of customs charge of section 46. If the goods are cleared for home consumption in the warehouse under 30 days after unloading, such goods can be disposed of in construction. Officer may deposit such goods in warehouse 30 days and beyond 30 days. The further 30 days are commissioned to the approve section 48 and 49. Export proceed. Export proceed is first term. Shipping bill of export, invoice, packing list, contracts, export authorization, and related documents. The exporter to customs officer, then customs officer noting the shipping bill, examination of goods, and let export order will be issued. Then after grant of license, submitting the shipping bill, shipping the shipping bill and bill of export. Then grant of entry outward, and grant of entry unloading the goods in the ship in case of baggage, in case of loaded without permissions. And 6 permission submit the export manifest. Complaints by the person in charge. Loading of goods only by the approval places. Section 33. Loading only under the supervision of a PO. 34. Loading with the help of the small boat. Shipping bill sufficient. 35. Loading on holidays and other office hours. MOT changes payable. Section 35. Shall obtain entry outwards from the customs officer beyond loading. Section 39. Shall file export manifest and department manifest and export report and after before departure. Section 41. Shall file passenger name record information before departure. Section 41. Shall obtain permission to leave the India for customs officer. Section 42. Complaints of export. The shall submit shipping bill in the case of export by vessels or and a bill of export in the case of export of vehicles by the electronic modes or ISK section 15. Shall assess the value of customs duty payable section 17 and discount the provision assessment section 18. Shall pay the customs duty if applicable immediate to the filing the shipping bill, defer payment facilitating of export. Shall obtain late export order section 51. Transshipment and transmission of goods. Section 53, 55 customs tax section transit conveyance. Transit means continuing transport of goods and same conveyance. Bill of declaration, no bill of declaration required for file for transit of goods. Continuity in the records of in the control. In the case of transit, the records already has been shipped or the aircraft manifest continues. The import goods are shown in the manifest and same bottom cargo. Then there is a continuity records. There's no change in the control over the transit being lost. In the first port airport, the IM and AM. IM and AM will be import manifest and arrival manifest. It's containing the details of the normal cargo as well as the transit cargo. In subsequent IM and AM is file and contains transit cargo. Inclusion value of the import goods shall be the same of the freight and CI value. Transshipment. In section 54 and 55 transshipment means continuing to transport of goods in any other containers. It requires a filing of bill, transmission and declaration transshipment. Quality of records. It's a transshipment of goods continued in records and not maintained on the goods and transferred in the conveyance. IEM, AM convey details of normal cargo as well as the transit cargo. In the shipment portal, IEM, AM file contains of transshipment. Inclusion is shall not be point of transfer value. Import export of bills and relevant to the date of rate of duty. Postal import relevant date of retirement of import of vessel. The later of the following two dates: the date of the postal authority present of parcel list PO proper vessel, date of arrival of vessel. Import of aircraft and vessel, date at which postal authority present the parcel list to PO. Postal exports, the relevant date of determine the applicable rate of duty. Exporting vessels and aircraft, the date in which export delivers the goods to postal authorities. When goods import and export through the couriers are treated as a part of the goods import and exports. Faceless assessment of under customs. Bill of entry that is specified in scrutiny and an assessment in the assessing officer who is physically located in the customs station, which is not in the port of import and the customs automation system. It is a separate assessment process for the physical location of port of import and are using in technology platform. From the importer perspective, then is change in the process of filming the bill of entry. Importer first importer, okay, proper officer under customs reject the bill of entry after customs complaints CCV importer, then customs complaint verification confirmation, then under proper officer bill of entry and under proper officer customer complaints verification confirmation will be there, then okay na custom clearance bill of entry upon payment of tax duty. Okay. Power of customs officer. Customs officer any time about any convention carrying import export goods and may remind such convention such periods of consider necessary. Customs officer may require billing person charging conveyance of the products and any documents of answer of question. Payment of customs duty through the electronic cash ledger and electronic duty ledger. ECL, EDSL. Amount deposited in the payment duty, payment of credited in the ledger. Balance in the ledger can be used for payment of customs duty, interest and penalty. Unutilized balance can be claimed as a refund. EDCL, refund payable upon the export and initiative on the FTP are credited in this ledger. Balance in the ledger can be used for payment of customs duty only, not interest and penalty. Utilizing balance cannot be claimed for refund. Electronic cash ledger regulations. Form ECL01 electronic cash ledger. ECL2 challan and deposit of section 51 customs are customs act 1962. ECL3 form ECL3 challan payment of any sum under customs act 1962. Any amount of payment, the deposit is the payment. Section E4 electronic duty payment ledger. Form ECL5 application for the refund of deposit under electronic cash ledger. Deposit made in the electronic cash ledger shall not be accrued any interest. Deposit shall on ECL2 valid for 15 days. The mode of payment net banking RT NEFT and over water account 10,000 per day. OT OTC limit 20,000 per day shall not be applicable in the government deposit or upon the authorization of customs officer in deposit made. The commissioner charges paid or deposit shall be borne by the person making the deposit. Upon successful payment of challa, identification number shall be generated. Amount of ledger can be used for payment of duty, interest, and duty fees and amount of the payable under the Customs Act and Customs Tariff Act. Balance can be claimed in the refund which shall be paid in the bank account and the import of export. Now, provision of section 51 will be applicable in the following cases. The customs automated system is not in the place of custom station where the goods are imported and exported, accumulated packages, making payments other than the duties under the customs, IGST, compensations, interest, penalty, fees, any other amount payable under the Customs Act, the Customs Tariff Act, and demurrage charges, custodian charges, etc. Deposit with respect to goods imported and exported to the international courier terminal. However, on respect to 5th March of 2000, 1st March 2015, this ECR regulations and regulation and applicable for clearance for the international courier terminal. Electronic duty credit ledger regulation 2021. A shipping bill, a bill of export, and bill of export presented on having a claim of duty and a credit under scheme shall be prescribed processed in the customs automated systems, and the claims allowed in the customs as per the condition of restriction notified the scheme as after the filing of export manifest and export report. Once the claims allowed, the role the data credit will be aggregate generated for the proper officer in the customs automated system. Separate role will be generated for each system. The duty credit available, the fee script in the ledger shall be used for the payment of duty of customs. They are specified in the first schedule of customs tariff 1971 basic customs duty. The e-script shall be valid for the period of 2 years on the date of circulation in the ledger, and the duty credit in such e-script remain utilized for the hit of the period lapse. Further, the duty credit and the e-script shall be lapsed shall not be regenerated, and the ledger including e-script and the transaction made therein shall be visible for the customs automated system to the recipient for the duty credit and customs. Transfer of duty credit to e-script shall be allowed within the customs automated system for the ledger of a person to a ledger of another person who is holder of IEC number and issued by the terms of Foreign Trade Development Authority. The duty of the credit available in the e-script shall be transferred at the time of the entire amount. So the e-script another person of transfer of the duty credit in the part shall be permitted. So import of goods in the concessional rate of duty section 2022. Manufacturer and service providers eligible for exemption notification. I import goods without payment of customs duty for the import concession rate. Such imported goods to be used for manufacture of the commodity or provision of output service, excluding after sale service, and being put to specific end use. Supply to extent intended for notification. Such manufacturers can be both the importer and get the done job work basis partly entirely. However, some sectors of the gold, jewelry, precious stones, and metals has been excluded from the job works. First, information from ICGR 01 or continuity bond with the surety and security. Then imported goods concession rate identification number. Then 2 3. Then importer intention codes under the ICDR rules. Customs common portal. Then update 3 import clearance with the payments and CD and concessional rate of the further BO bit of entry and the Indian bond number, and bonds get debited in the exchange concession. AC and DC customs Chennai board. I intimation the form IGTR regarding the non-receipt of short receipt of goods and utilization of goods, defective use of out of the import goods within 6 months of date of imports. Export with respect of the payment of a customs duty and value of greater than value of sold goods at the time of import. Sold in India, payment of duty under with the interest. IGGR 1 prior information to provided by the importer. IGGR 2 information regarding non-receipt of goods imported to the provided by the importer. IGGR 3 monthly statement. IGGR 3A details of goods consumed by the immediate resident abroad. FAQ of record. What is the information to be submitted? Name and address of the importer and job work, if any. Goods from produced or process undertaking. Nature and description of imported goods in case above. Nature of outside service rendered for the import goods. Particular exemption notification applied by the import. The intention of port of import. The particulars are permissions intended to use in the case of unit transfer. Detail of the end user's bill. What is the procedure for sending the goods out job work? Importer shall maintain the records of goods sent in job work convention, and the same is monthly statement of ICG as a way. Such goods are sent out in the cover the delivery challan by CV bill. Such goods should be covered after processing with 6 months from the date of delivery challan. Job work shall be remain necessary record with respect to the goods. Can the imported goods be transferred from one unit to another? Yes, the imported goods can be transferred one unit to another to ensure that the goods are sent and covered under EV bill and the invoice. Maintain the accounts and records regarding the goods sent, received, and waste generated if during the manufacture process and mention the sense of monthly statement. ICGR1. What is the procurement of supplied imported goods and the end of husband? Importer shall maintain the records of goods sent out of job work and mention the same monthly statement. IGGR03. The goods are sent out under the cover and the invoice supply invoice. In the case of supply of replacement or replacement of export against supply, the end use recipients shall maintain a record regarding the goods of such goods and manufacture process undertaken and such waste manner generated in this produce and the details of the concerned office as they when asked. Can a capital goods can be imported unless the rules capital goods which are capitalized in the books of account can be imported under concession rate and the manufacture of notified goods and provided notification service after the goods can be cleared for domestic market and payment of duty, interest and depreciation value. What is the type of bonds execution? The continuity bonds surety. Surety is deemed appropriate by the judicial ACDC customs and they can pay an amount equal to the difference between the duty leviable on import but the exemption and then already paid along with the appropriate interest. What is the rate of duty period and the interest component? Interest 15% per annum, the rate of duty out of customs until the date of payment. What is the accounts and records to be maintained by the importer? Quantity and value of the imported, date of receipt of goods imported to the relevant purpose, quality of goods consumed, goods sent out for job work and received for job work, and goods re-imported from the any other goods remain in stock. What is the compute the depreciation amount, the capital asset and customs duty and such capital fair value of imported goods percentage are depend upon the from the data you put to use and the data clearance model. For every quarter, in the first quarter 4%, for every quarter, thereafter second quarter and third quarter 3% of every quarter, and then the fourth quarter 2.5%, 4 3 2.5, thereafter 2 and the fourth and after fifth quarter 2%. Custom duty and above shall be equal to the difference between the duty levy on such a duty. Such goods as exemption exemption the customs duty above shall be equal to the difference between the duty levy and the goods but the exemption is available and they already paid and the value of import. As depreciation value or the straight line method and quarter should be based on the period specified above and not based on the character quarter. When the utilized and defective goods used exported are sold in India within 6 months of the date of import, not specific, not applicable in the capital goods. What is the other application followed by the importer? Monthly statement, the form IGRT3 to be filed on 10th day of the month of every month. However, in the case of immediately recreated month, such a statement of form ICGR03 shall be submitted at a time which at the bottom monthly statement and form IG3 subsequent month. Segment exemption of customs. Section central government notification official gazette exempt the goods from the payment of customs duty either conditionally or subject to certain conditions. Goods to cross transit. There are some no levy of under section 12 and consequently customs are not payable as per the Supreme Court decision of the present case. Goods unloaded in the port and airport order of clearance. 3 clearance for home consumption, clear from the home consumption or clearance from the warehouse for home consumption. Liable for penalty of GST or clear from home consumption. This is the levy section 12. If the goods are pilferated, then section 13 customs duty shall not be payable. Once the goods are restored, the share duty shall be payable. If the owner does not want to take the goods delivered, acknowledgement from the title section 2 class 23.2. Is there any levy as per section 12? If the goods are lost and destroyed, remission of the duty paid in section 223. If the goods are damaged and retreated, abatement from the payment duty. 22. Section 13, section 22E, section 23 and section 22. Title: No duty on proliferated goods and when applicable, goods are proliferated. Benefit: the customs duty is not payable on goods but payable on custodian. Remark: if the goods are restored and the customs duty is payable by the importer. Now, what is applicable in case of warehouse? No. Section 23 to relinquishment title of goods. Goods are not conformed to the when applicable. The goods are not conformed by the request. When if it's a custom duty is not payable, relinquishment is not possible in the case of prohibited goods. When it's applicable in the case of warehouse, no, but relinquishment is possible under the provision section 68. Remission of goods section 23(1). When applicable, goods lost and destroyed amendment. Customs duty benefit customs duty payable approved the officials and when destroyed and get reflected. Remark: where the application is in case of warehouse goods, no. Title amendment: when applicable, damage or restoration of goods. Benefits of customs duty payable at the discount and the appropriation to the value of damaged goods. Remark: CD payable is equal to value after the damage into original CD. Original CD plus value after damage. What is the applicable case of the warehouse? Deliver damage is equal to X determination. No, only in the case of unloading of goods. Derelict, jetsam and flotsam. In some goods, derelict and jetsam, flotsam, the wreck board and coming into India shall be dealt with if they have been imported in India unless proved by satisfaction of the officer they have been entitled to admitted duty free. Section 20 re-importation of goods notification. So import CD payable, export if an incentive claim on export upon the re-import CD payable and incentive claimed if the export of repairs and upon the import of CD payable and fair cost of repair plus including materials and labor but flights and insurance both way. Time limit is equal to year plus 2 years. Even IGST payable on the fair cost of repair, including material, freight, and insurance. If the export is subject to the export duty, then the upon re-importation duty of customs duty paid on the claim section 26. If the duty is exported under the duty exemption AFID, EPCG schemes under the FTP, then upon the re-importation IGST and compensation sales, if applicable, payable time limit re-import in 1 year plus 1 year. If the goods exported were not subject to any incentives, exemption is not export or repairs upon re-import and customs duty is not payable. The export of imported goods must be same and ownership would not be changed. Concession under the notification is not applicable. 100% EOU units of the free trade zone and public private warehouse and tobacco and petroleum programs. In the case of goods taken outside into exhibition upon the bringing back within the 6 months of the date of export, re-import, customs duty is not payable. Notification 158 70 95 amendment notification 16 2018. Export time limit, reprocession, refining, remark, repair and construction within 1 year, repair and construction notified goods within 7 years and any other notified goods within 3 years and 10 years in case of Nepal and Bhutan. Import time limit 6 months plus 6 months extended. Import goods and re-imported should be the same import of time of importation exclusion. Re-export if any loss in import of goods is noticed during the operation, such loss shall be exempted from the value of the customs duty, subject to satisfaction of Assistant Deputy Commissioner of Customs. And this exemption is available even the priority of re-exporting in the short of low quality of long as name and generally the goods in same and certain machineries and cautionary computers and control TV. The customs duty is not payable on the import provided goods are re-export with the specific time and above condition reflected. Section 21 goods are derelict and work. Such goods are bought coming into India shall be derelict and if it is imported into India, the proper official customs will admit them for duty free. Section 24 denaturing and multiration goods. Owner of the goods shall make a request of denaturing and deligma and chemicals and evaluation and this be a commissioner. The central government may make a rule regarding the same and the duty is payable if the goods are imported in a denatured and multi-form. Assessment and audit under customs. Self-assessment section 17 customs are a duty of self-assessment of import export and the duty importer enters into the contract enters into the import duty section. What is a bill of entry? And exporter enter into the export under section 15, shipping bill, a bill of export, and shall self assessment of duty in the levy of exports. Verification of proper officer. Proper of few entries, a shipping bill selected for the risk parameter basis in the security assessment. Assessment of the duty of the proper officer. Self assessment is not done correctly. Imposter of agree the pay of pay the same, and amendment bill of entry and shipping bill. Speaking order of a reassessment is passed unless the importer agrees with the reassessment. Within 15 days from the day of reassessment, the entire bill of the shipping bills or another case may be. Personal assistance section, personal assignment section 18 of Customs Act 1962. The situation was led to provisional assessment. The import and export unable to do self-assessment. The proper officer deemed to be necessary for carrying out the chemical examination or test. The necessary documentation are procured under CO, and such a CO wants to carry out the further inquiries. Necessary documents produced before CO, but such a CO wants to carry out this further inquiries. Customs finalization provisional assessment regulation. Order of provisional assessment. Intimation of furniture varnishing document within 15 days. Documents to be submitted within 15 days on the 3 months of the company and the 3 months of ACDC. Unlimited time for commissioner. The finalize of provisional assessment. Documents submitted within 2 months from the date of receipt of documents, and documents are submitted within 2 days with the time allowed for the submission such document. Extension for the time of finalization provisional assessment. 3 months from the commissioner. The final assessment provision is greater than assessment provision. The final assessment and the difference of duty payable along with the interest of 15% from the date of the month in which provisional assessment is ordered is still date of payment of provisional duty. Final assessment provisional assessment. This referral duty is adjusted in the towards a duty tax payable. The final assessment is less than the provisional assessment. The differential tax shall redefined with 3 months from the date of a final assessment, and it's not refused interest of 6% per annum possible in the delayed fees of 3 months. Importer shall execute a bond. In case of warehouse, such as bond is a thrice amount of the duty payable and furnish a security in forms of bank guarantee and cash deposit. The refund of deferral duty and the final assessment subject to the unjust enrichment. If the by the burden is rising together, then the amount is to be refunded is transferred to the customer fund. The provisional assessment is applicable only for import and export. For the conversion of the provision of penalty section 50 or 50,500. 50,000. Audit under the Customs Act 1918. The post clearance audit, the structural examination, post clearance of goods from the customs and business relevant commercial business, from the sale contract, financial, non-financial records, and physical stocks and other assets as mentioned by the year of year improvement. The proper officer may carry out the audit and assessment of the import and goods and service. It's audited under the Act as either the officer or the premises of the auditee as manner as prescribed. Indian Customs Regulation 2018, Section 13. India records to be preserved by the auditee for the minimum of 5 years, and the manual electronic available records of proper officer when demanded. Regarding 4 section of the section of auditee and documents is based on the risk parameter basis. Regarding registration 5, the audit can conduct on the auditee premises. 15 days notice to be given at the PIO office. CMI can be applicable for assigning the audit as per the approval of the seminar. And 7, regeneration of the any provision of regulations leads to penalty up to 50,000. Duty payable upon self-assessment. Intermediate payment on the date of possession of BOE on interest on 15% annum with respect of every day delay. Correspond deferred payment. BOE bit of BOE is a return on the payment which is between the day of the month and due date of the 16th month. If the BOE's nature's payment is then the 16th day of month till the day of the other, and this due date is till of following month excluded. The BOE holiday excluded. BOE is a return on the payment of 16th March and 31st March. Due date is March. Interest of 15% per annum and every person every day delay beyond is acceptable. due date of amount, reassessment, provision assessment, final assessment, provision assessment. No time limit prescribing every day delay, and within 1 month from the day of on which bill of entry is required to the customs officer. Interest of 15% per annum and 47 that every due date beyond the due date. Interest 15% with the a form of interest and every month which they provisionally passed the TL on the data payment. Setback and duty drawback refund. Imported goods exported as per without use section 74, as per after the use section 74 to after manufactured product section 75. Import tax credit and duty drawback. In the case of the accounting for duty drawback of IGST, GST compensation is paid on import. Therefore, IGST cannot be availed with respect to the same. However, in the case of 75, DBK covers only the customs duty but not IGST, GST customs duty. So the IGST can be availed with respect of the same and can be claimed a refund on the ITC upon export. Time limit, duty drawback and duty drawback section already. Time limit, goods must have been exported within 2 years on the date of payment of import duty plus further paid approval is CBI CBIC. Time limit for duty drawback, no time limit. Rates of DBK duty drawback section 74. 90% of unit duty drawback at the time of importation and 74 to duty drawback reduction of rate. Duty drawback. Rule 3 are all India rates centrally. Rule 6 barely rates, and then the all the industry rates fixed in the DMK schedule. And sorry, BMK schedule. Schedule 7 of SRB special brand rate and BMK as fixed. The export goods shall be deemed to be entered in the export for the date of issuance of let recorded export. Not on the note on the date of export when the duty is provisional visa on the date of payment of provisional duty as per the rule central government relevant amount rates and determined with the rule 3. Exporter shall apply for the inflation fluctuation of brand rate and until the fluctuation brand rate exporter requires to grant the DMK and expansion provision. Rate is less than 80% is actual duties and mandatory prohibition. The DBK is less than 50. Market value of the export goods is less than DBK. Value of import is 1 lakh. Custom duty paid is 30%. 30%. Export such without the use of 18 months. The market value of the goods comes down 20%. And then the DMK available is 30% 20%. It's export 20,000. No DBK and the MK export is less than DBK. And DBK is 172 to as avail respect of wearing apparel, teachers, exposed cinematography films and unexposed photography plate. DBK is less than 50 crores. The market price of export price is less than the DBK. Value of export goods in Indian market of 30,000. FOB undecided at 4 lakhs and DBK of 10% of FOB is 40,000. DBK is not allowed. That's a rule 19. The margin DBK is 1/3 of the market price of the Indian wholesale market and the export goods. Export price 1 lakh. Indian wholesale market price is 50,000. Here is 30% of FOB 30,000 and DBK 50,000 on way 3 16,000. So rule 8, no DBK allowed if the value of the export goods is a result of the value of imported goods and said in term. Rule 8, no DBK allowed the value of the exported goods are not part of the defined percentage of the value of import material is used. Discrimination provision. The central government notified that the DMK can be punishable if the goods may pass exported and likely to be smuggled back in India. And identifies the export shall establish PO and exports are one of these important earlier exercise. Export shall be applicable to PO and the export goods has been manufactured using the import duty paid goods. The export shall be applied to the extent of SBB which is not which are entitled to when that is applied the SSB but flattening the as export as requested by the grant DBK and various provisions. DBK change made no separate application. The billing itself is treated as application. DBK rates as per the motor vehicles imported by any person other than imported by individual person use. Time frame 2 years and other cases. For the every quarter 4%, 3%, 2.5 and 2%. Upon 3 months DBK 95 and 3 to 95, 85, 6 to 9, 75, 9 to 12 and 70%. 5, 5, 5 and 9 to 12, 15 months 60%, and 15 to 18 above 80% the DBK is that. If the DBK is by paid within the claimant within 1 month of the claimant shall be 6% per annum. After that, at the average of 1 month, the time of duty DBK payable on the government to exporter. If the interest on DBK is already claimed, there shall be 15% of the value of the payment DBK until the date of recovery DBK payable by export to court. Refund under the customs. Section 26, a refund of customs duty or exports if the export goods are imported within the 1 year from the date of export. Application the refund shall be used for 6 months for Section 28 and from the order of home consumption in the respect of import goods. Article 26, a refund of customs duty on the import such goods are defective or confirm the specification, the import shall notify the customs officer. Clearance of the export, clear of exports are minimum 30 days and 3 months on the order of the home consumption. But this import goods and DBKs until one shall be have a claim of the refund of Section 26C. Application refund should be made in 6 months from the date of instruction and onward. Section 27. The refund cases, customs duty of import export of the refund should be made 1 year relevant date, and the date of 1 year shall not applicable in case of date duty not paid. Section 27, time limit for granting a refund of 3 months. The date of application and GST will be 6% per annum. After expiring of 3 months, the refund is granted. Passenger baggage eligible baggage origin of country duty will general passenger of Indian origin and foreigner or resident in India, excluding infant, tourists of foreign origin excluding infant. Other than Bhutan, Nepal, Bhutan and 50,000 and 15,000. General visa allowance passenger in India origin passenger resident in India exclude infant or tourists of foreign country. Nepal, Bhutan, Myanmar 15,000 land. Infant children not more than 2 years any country nil. Jewelry allowance in India passenger who was a resident and foreign anywhere. Jewelry of gentleman 20 grams value up to a cap of 50,000. Female 40 grams value above 1 lakh. Passenger of 18 years and above anywhere one laptop or notebook. What they use the personal effects on travel sovereigns irrespective of the values freely allowed. Personal effects mean the value of satisfactory daily degree does not include jewelry. Any free allowance of the one person shall not be proved with the free allowances of another person. The free allowance is not applicable in section or actual one. And the firearms category of firearms up to 50 cartridges and category exceed 100 cartridges, exceed 25 tobacco and exceed 15 upon the limits allows under the category. Alcohol wine up to 2 liters of silver gold form any other ornament LCD LED plasma TV. The customs duty levies 38.5%, bursting custom to 85, 30 social welfare 10%. Under duty world goods excess of duty free allowance and GIGS exempted package. For the annexation of 1 and 2 both upon the limit customs duties are 110%, that is 100%. What is entailed for passenger who is transferring residence to India? Depending upon the minimum time of stay, number of the passengers fulfill the condition, various articles are allowed a free duty 3 to 6 months, 2006 1 year 1 lakh minimum, more than 1 year and residing 2 years 2 lakhs, stay in 2 years support value of 5 lakhs. Ineligible articles and discussion: color TV, video system, dishwasher, refrigerator capacity 300 liters, deep freezer, video camera, cinematography, film certify, gold, silver, any other ornaments these are ineligible. Other points: all the above provision is equally applicable to unaccounted baggage. The baggage is arrived 1 month after the passenger arrival, 2 months before the passenger arrival. The member of crews in the service any being petty up to 1,500 per person per family, and the passenger carrying on the non-durable, non-prohibited goods shall be walked through the given channel. Passenger carry putiable and prohibited goods shall walk through the channel. The passenger had made the true and fair full consideration regarding the containment of baggages. A temporary decision baggage, while the baggage is a temporary passenger When the baggage of the passenger contains articles, then the duty upon the important they polluted and respect of which duty is declared as may be. Proper officer may, at the request of passenger, detain the goods of the purpose on which is returned for him that leaving in India, and for the reason of the passenger is not able to collect the article at time of leaving India, the articles may be returned to him through any passenger authorized by him or leaving India and the cargo assigned to the name. Custom duty rates, baggages, arms, no GFI at on 10%. Cartridge norms up to 50, 80, 31, up more than 50, 110%. Cartridges norm to 50, 38 point, more than 100, on 10. Cigarette up to 25, 38, or more than 38, 100. Tobacco up to 125 grams, 38, or more than 25, 110 grams. Um, Alcoholic liquor up to 2 liters at 8.5, beyond 2.9, 30.2. And gold and silver ornament GTA 31 other than gold and silver and GTA 38.5. LCD and final the GTAs are available 38.5%. Warehouse under customs. Warehouse under customs import goods are deposited without payment of customs duty in the customs warehouse license of customs department. Types are public, private, special warehouse, and then public warehouse goods belonging to any person can be deposited in the private warehouse only belonging to the license can be deposited. Only notified goods can be deposited in special warehouse in the case of customs warehouse. If the warehouse is being cancelled, the amount reach a condition, license holder, the holder and warehouse can be transferred to the another warehouse later 7 days from the date of cancellation was celebrated. The warehouse bond is required to deposit a 2 year 2 stay consignment bond and general bond. Amount of consignment 3 times duty payable time of deposit. Amount of general bond specific officer. Upon the exercising the bond, the officer shall pass an warehouse order. Upon the warehouse order, 1 year from the date of warehousing under the consigning and the nature of goods, it may be declared used and it may be reduced. Hence, this may be article EOU, EHT, STP, warehouse and manufacture operation permitted. The interest payable is 15% annum and from 91 to the 90 of the day of the warehouse order and TT they have the actual date of payment of custom duty. Manufacture of other operation permitted in the warehouse and duty not payable on such a warehouse goods. It is processed goods and exported. However, the customs duty payable on the waste and scrap applicable rate and waste and scrap arising from the manufacturing such waste and scraps are not destroyed within the warehouse. In the case of volatile goods, the customs duty payable on the quality of loss on accounts of evaporation and other natural calamities. Best record port goods custody 30 days airport BOE of the warehouse into the bond or cleared without payment of customs duty but bond had been executed. Store belonging to license holder, store belonging to the person, public household, private household, special stores specified goods belonging to any person, physical control and all three warehouse license of principal commissioner and record based control. In the case of owner rights inspection goods, two side sort of goods, three sort of them on sale, caution to excise and prevent them on detention of damages. Manufacturer operators are permitted to warehouse the warehouse period till the clear consumed and EOU private warehouse too. Others 1 year from the warehouse. Interest waive no interest 90 days from the 90 from warehouse order. No B has a transfer request to make CD and making bond written. The export bond EC of the goods customs on the file can be filed. A chartered clear with payment of customs duty. Bond executed shall be increased. Corsham Royan case of SAB sugar goods demand to be improper clear on the expiry of warehouse. No BOE shall be shipping bill to be filed. COD will be payable. Another warehouse, import warehouse and export. Foreign trade policy. Foreign trade policy set of guidelines and instruction issued by Central Government Ministry of Commerce and Industry matter of the right to the import of goods into India and export of goods from India. The FTP is regarded as development of promoting international trades and this customs duty 1960 contains the procedures, valuation, consequences. The provision of the FTP is governed by the foreign trade regulations and 1992 the FTP is formulated, supervised and controlled by the directors, General Development or DGFT and regular authorities. FTP is audience FTP first year 2023 and current year 2023 shall be continued to operation unless otherwise specified in the content of FTP basic policy export inside handbook of procedures I8 and red forms standard input-output norms, a harmonized system of coding of Indian water policy. And based on the FTP is import prohibited, restricted, and reserved stated trading interfaces of freely imported. In the case of export, classified prohibited, restricted, freely tradable authorization, license are written the export duty of direct general following and through the regional directors and regional authority. The DGFT may refuse to grant new license on the old FTP, restrict the goods exported from subject to actual user conditions, and only importer can use the DGFT dispose of the goods. Importer export code shall be applied in the every exporter importer 10-digit PAN number, and specific the provision of FTP and the procedure to be prevailed general provision. Trade facilitation FTP National Committee, Trade Facility and Interministerial Body. National Committee Trade Facilitation has been consulted to facilitate Trade Facilitation Agreement TFA and innovates the four pillars, that is transparency, technology, simplification, procedure, based assessment of infrastructure. A free passenger export committee. The consignment means the export shall not be withheld, delayed for any person, reason, and for any agency, central government. In the case of duty authorized by mass the undertaking for the export release of no seizure of an export of attitudes, no seizure and the disrupt the manufacturing activities on the concession with the prima facie irregularity. Seizure can be maximum 70 and irregularities and consumption. Authorized economic operators. It is developed by the Indian customs, enable the business in international trade to rehab the foreign benefits, secure the supply chain from the export and demonstrate the compliance with security standards and contracting overseas import export. The board clearance privilege the mutual recognition agreement party countries. Mineral sports and few follow reduction in the dividing time and related costs. Other measures single window system to facilitate the export of perishable agricultural products and Riyadh Bantu hand molding schemes for the mention of new interfaces. Issue of import export and DGFT online customer portal. Online facility by e-registration form come membership certification, online e-certificate origin, online facility for file document of control and trade disputes. This selected the town of export, select the town of producing goods out of 50 crores more than notified by the TE. In case of handloom, aircraft, agriculture, fisheries, and would be limited to 150 crores. Common service provided by this area, which is entitled to authorization of FPCP schemes, providing the facility assignment of priority. Status holder certificate, status holder exporter of grand status certificate of FCP, mean to encourage export of recognizing the achievement and helping the market building market structure and export from the export promotion. All the exporters and market service and technology having IEC shall be eligible for recognition of shareholders. The export performance rating FEB, FOR and star export. 1 star 3 million, 2 star 15 million, 3 star 50 million, 4 star 200. So 5, 3, 15, 200 and 800. 15, 50, 200. Benefit of status order. Authorization, customs clearance, self-declaration basis. Fixation of the input-output norms priority within 60 days. Exemption of furnishing the bank guarantee unless the specific 2-star EH where the shall be permitted to establish export awareness. The preferential treatment of priority handling and consignment. Self-certification made in India as the discuss of holders and can export and the free of cost and the export promotion of 2% average annual relation during the preceding 3 license year. Gem jewelry sector 1 crore or 2% average current previous year, whichever is lower. The exemption on the compulsory negotiation of documents within the banks. How to compute the export performance. Status are recognized depends on the export performance, and application shall be recognized on the status holder achieving the export performance, which is counter of the FOB value export process realized during the period current and previous financial year. Usually, export earnings should be converted to foreign exchange. However, the export proceeding realized in rupees in the export of the year and received through Vastro account provided by RBI and necessary export performance as a converting to rupees dollar. The exchange rate notified by the CBSE first day of each financial year by granting the status export performance necessary for 3 preceding financial year, 2 preceding financial year, gems and jewelries. So 2% 1 crore. Grant of double heritage average of the SKH following cases grant of double heritage. MSME manufacturer unit, ISO unit of northwestern state, Sikhism, UT Jammu and Kashmir, and export of fruits and vegetables. DGFT means For the impact of safeguard Indian external position, export foodstuffs are essential producer for preventing relying on storage, for preventing serious injury domestic industry, for import of export of publications, standing regulatory for classifying, granting market, for import of fisheries, for enforcement of government fisheries, to import of remove, promote establishment of article industry, for protecting human and animal plant, for import and export of gold and silver, for the conservation of executable natural resources, for the India's obligation under charter, for the protection of the country's essential security interest. Provision relating to import export import of second hand other hand restriction under the required authorization of capital goods computer laptop air conditioner DG set photograph restricted required authorization other capital goods in furniture spares no restriction free of cost and importable. The waste of scrap metallic it is used for restriction required authorization declared by the ACEC and data without any authorization of fees. Cleared by season and free subject to payment of customs duty usually deemed import as season. The incurs of import duty capital goods in the project are bought at least 1 year without authorization even though the goods is imported otherwise required authorization. Import export gift in case of import gives restriction goods are customs clearance certificate CP permit is required other goods customs clear permit required restriction only under the authorization can be export. Other goods valid up to 5 lakhs per year no authorization value greater than required in case of export of goods. Import of samples, vegetables, seeds, bees, and new drugs authorized required the T up to 2000 per CAF. Authorization not required. Hours, otherwise required samples up to 3 lakhs can be imported by all the exporters without any customs duty. Without customs duty. For export of samples of resampled exported goods, no restriction. Sample of restricted goods. DGFT can be exported in the quarter of passenger baggage without authorization. The free import of goods repaid abroad without any authorization. Import of capital goods under the lease of finances. Permission of RA not required and the permission of RBI required. Goods already imported without authorization can be cleared against authorization issued subsequently. No possible to reverse the execution of BG, LULT, bonds, customs and import without customs duty. RA of local purchases. Warranty spares other purchases and the soil in the export among the main equipment subsequently but the constructed warrant period subject to approval RBI. In the case of third party export, shipping bills indicate the same both manufacturer and third party exporter. Other document invoice, export invoice, bank realization certificates which are named as third party. Various export promoting scenario here with the procurement of import without payment of duty. Big difference advance authorization duty free import. Transferability authorization each subject to the actual user condition they cannot be transferred. Duty and export duty free transfer after the export obligation is completed. Export obligation minimum 15% other than T 50% case of T minimum value 20% period of fulfillment of export 18 months on the date of authorization 12 months on the date of authorization in case of duty free export. Applicability of GM and military applicable not applicable. Fixation of SIN in case of advanced authorization is issued by the SIU and the product is not fixed and fixation of SIN DFI can be used only in the SION as fixed by the base product produced to the product to the exported. Duties that are exempted, all duties are payable on the import under the AI exempted. Exemption with respect to IGST, GST compensation that's up to first 6 2023. Only BCD payable on the import under DIF is exempted. What is available? It is issued on the pre-export and pre-export basis of the entitlement. It shall be issued only on the post-export basis based on the export made through the useful of a subsequent computation of value of addition. Value addition to A is equal to B minus B into 100. What is B? A minus B divided by B divided market value of FOB of the export actual cost by FO or FOR of the values in case of deemed export CAF of the import and authorization plus the imported material is benefit to TVK and expected also intended to claim. In the case of cost free material supplied by the foreign supply notional value of the material notional CAF is declared by the customs shall be added as CFI and also FOB of the export promotion capital which is when there is a scheme about the export promotion capital scheme permit the export procure the capital zero customs gain the return of exports under the obligation of fulfill the export obligation export with respect to IGST CGST capital goods to be input on the pre-production product and the post-production local purchase also possible. The export obligation is the value of products covered under the authorization permission at the time of quantity value in both as may be prescribed a specified regional computing authority. Export obligation consists of the specific export obligation, average export obligation, specific EO covered, and the average EO. Therefore, the first average EO should be met, and then specific EO should be met. Export obligation. Specific export obligation, average export obligation in the equivalent to 6 times the duty saved and capital goods imported by the EPCG scheme. It is well for the 6-year consolidation authorization due date follows the block of 1 to 50% block of 50-year balance. Average export obligation is average export level of export should be application 3 preceding licensing year for same kind of similar goods. It has been achieved within the overall export obligation period, including external period, unless otherwise applied. Valid authorization shall be valid for import 24 months from the date of authorization, and revaluation EPCG authorization shall not be granted. Other condition, import of capital shall be subject to the actual user condition till the export obligation completed. Only after the export obligation completed, capital goods can be sold. The second capital goods are ineligible for EPCG. Both the physical export as well as then specific deemed export shall be counted for the fulfillment export obligation. In the case of authorization holder of fulfill 75% of specific export obligation, 100% is average export obligation till date. In any 3 years, a remaining export obligation shall be condemned and authorized redeemed. Under the scheme, capital goods are imported and full payment applicable duties in cash. Later, basic customs duty paid on capital goods. Indigenous costs of capital goods and benefits of domestic supplies are deemed exports. Merchandise export from India schemes omitted one fund and replaced with the route schemes. RO duty, the remission of duty, taxes and export duties. Refund of export, central states, local authority that is so far as being rebated to refund. Refund credit of electronic cash ledger through the e-script maintains and 51 the Customs Act 1962, which can be used for payment of basic customs duty, import and transport to other import. The rebate under the scheme shall be available in respect of duties and taxes already exempted and remitted and credited. Under the scheme, the rebate shall be granted in eligible export on a negotiated scheme percentage of FOB in the value of the cap as unit and the exported produce, whereas the required export items that is categorized under the notice 8 agent HSN code. However, certain export items fixed quantity of rebate should be unit and be notified. The rebate allowed under subject to the receipt of sale proceed within the time allowed of the FCMA 1999 months from the date of export. Failing of this rebate shall be deemed to be never has been allowed. The rebate also dependent upon the realization of the export service at the time of issue of rebate. Then the adequate safeguards avoid this misuse of the amount and non-realization and the substantive improvement of operation of the drawback scheme IGST and GST refund relation to the export under the application of the claim under the RODPT scheme. If the goods proceed are not realized within the time allowed by the FECM, then the rebate granted shall be recovered from the person whom the rebate is granted, even if the duty credit is transferred to any person. Ineligible supplies and category schemes: export of import goods, export through transshipment, export goods to minimum export price or export duty, restriction goods to export in ITC, HS, prohibited goods for export HS, deemed export, supply of products manufacturer DTA, SEZ, FTC, product manufacturer 100% EOU, EHTP, BTP, customs, bond, warehouse, SEZ, and FTZ, and product manufacturer export discharge of export obligation A and EFT. Oh wow! Export promotion zone schemes. What is the export promotion zones? EOU and EOU and EHT, Electronic Hardware Technology Board, SIP, Software Technology Board by Biotechnology Board, covers unit all the units other than the trading are covered under the schemes. Net foreign exchange units within the period of 5 years, which has been achieved the positive NFT exchange equality. Such business, such period of 5 years can be excluded. Implication: service provider exporter so first outside India supplier deemed export supply of good service CGST, ICST, UGST, IGST payable by supplier EOU, DH, SGST, and service provider exporter import of service and IGST payable RCM, import of goods entire ICD and IGST exempted. Recipient recipient ITC available, and in the case of GST payable, and the export of goods CD exempted 0 rated and 0 rated GST. Alternative 1+2 GST paid on the available ITSC or the EOU and refund of utilized ITC, and yes, alternative 2 on the GST paid on the available ITC of EOU, supply can get refund of GST, refund of unutilized GST of the record from the refund of unutilized etc. Exemption of IGST, GST officials also. composition of DTA and EOU, application of conversion of into EOU, EHIP, STP, and BP units from existing DTA units, having investment of 50 crores and above the plant and machinery exporting 50 crores annually shall be placed by EOA. Board of Operations. Who can establish EOA? What there are investment criteria? Only project has a minimum investment of 1 crore in the plant and machinery shall be considered as an EOA. However, the share applied to existing units and EHTP, STP, BTP, handcraft, agriculture, florist, aquaculture, animal husbandry, information technology, service, brass hardware, and brass handmade jewelry, etc. UOU and make such establishment UOU lower investment criteria. Circle of DTA entire production must be exported, but certain relaxations are available to recognize of DTA. Exit from EOU. When approval of DC Development Commissioner, EOU may be approved a scheme. Such exit shall be subject to payment of applicable IGST, CGST, SGST, GTGST. If any industrial policy force unit has been achieved, it can be liable for pay penalty at the time of use. Deemed exporter, rather than the important goods can be purchased within the country. So the foreign exchange saved, a foreign exchange earned. Consideration of supplies in INR foreign exchange. Supply of manufacture, supply of goods against A and DFI, supply of goods in unit located in the UAE, DHG, HTP, STP, and BTP, supply of capital goods and EPCG, supply of goods and other projects. Financed by the multilateral bilateral agency located by the Department of Economic Affairs and ICB, where the imports permitted was zero customs duty provided supply made in ICB, mega power project and ICB, financed by the UN International Organization nuclear power projects. The benefit of deemed export. Deemed export shall be eligible for all the following benefit of export: manufacturer and goods and qualifying export, advance authority and DFI, deemed export drawback, refund of BCD, import used manufacture of goods applied penalties. In the case of export or import in the country violates any provision of FTP, then the matter as may be law enforced. That is GST excise, customs and foreign like IEC number cancelled from the GST and DGFT. Thereupon, the export of import shall be able to transact the business and output input and purposes with the violation of provision of FTP taken place. Export takes place on the search and the suspicion material seized. Many various turnover on GST.